Welcome back, everyone. Yes, we are still doing videos. We're doing live streams as well, and I hope you're enjoying those. We've got 6 of those going on, but we are still going to be doing videos, and this is our month 34 stock purchase video.
So this month is the culmination of all of our live streams. So if you've been watching the live streams and you've tuned in and you watched every single exciting, edge of your seat, thrilling madness of finance, you too can figure out what did we buy this month by watching this video. So this is the culmination of all that, and we are buying a stock for 34 months.
Or what we didn't buy.
Maybe
more importantly.
There's a lot of what we didn't buy this month. So the market, if you've been following along with our live stream, we've been finding all sorts of stocks that are overpriced.
Very much so. The market is very much a bubble, which really begs a question that if the Fed says it's a bubble and market analysts say it's a bubble and the banks say it's a bubble and Warren Buffett himself says we're in a bubble and most hedge funds say we're in a bubble.
They do.
Why is it that most retail investors don't agree?
That or money. I think it's because their money hasn't run out yet. If it ain't that, I don't know. I have no idea.
Still got room on my credit card. How can I not have money?
So there's we just talked about this in our live stream. The record number of delinquencies on credit card payments, it's starting. So
I think 48 billion at the moment. 46 billion? 46 billion.
If that continues, what we're predicting, well, we think that the market's not going to be a great year for the stocks in 2025. If anything, it'll be flat, if not negative. We've been waiting for this for a really long time.
Yeah, and that bubble can just bounce down the road for a long time.
It is so much to this point that for the first time in my personal history of investing, now you've done this before, that I have decided to buy a bond.
They're safe.
I don't do that. Like ever since I've been investing in 2006, I don't buy CDs or bonds. I just buy individual equities, but everything is overpriced to the point where it just doesn't make sense.
Most of the time we just ride the waves, we ride out the highs, and then when it gets low, we buy more. Ride out the highs, when it's low, buy more. But at this point, we don't know when it's gonna go low again. So,
and Brian's point about the Warren Buffett hedge fund managers, JP Morgan Chase, Seth talked about it. I mean, that's a good point. That's a good point, Brian, because they're all saying it, and it just hasn't happened. In fact, the last time the Fed said anything like this was in 1996 with Greenspan for the dot-com bubble. That bubble took 4.5 years to finally burst when it did. So they're saying it now, and we could be sitting here waiting for another 5 years.
I would argue that we've already been waiting at least 2 or 3 years.
Yeah, so we're seeing that. The portfolio will reflect that in our purchase. When we talked about month 33, we were at about $183 a month, and right now we're just over $186 per month. And I would, that sounds pretty good. If you've got about a $60,000 portfolio, that's pretty good income. We are value, dividend, deep value, I guess, investors. So we're trying to find companies that are beat up relative to the strength of the business and the quality of their products relative to the price of the stock that pay profits and dividends. And that's not always an easy thing to do because a lot of times the businesses that you're looking at have a lot of negative sentiment and news surrounding them. So you have to find the diamond in the rough in that environment. And we think we've done that this month, but not in the way that you would expect. So our portfolio is giving us about $186 a month. And it is still, as of month 34, the market is not behaving the way I tell the market to do something and it needs to listen, and it's not listening.
You need to send that market to this room.
That's right.
Think about what you've done.
It's historically, like the Dow, the S&P, they have regular like 10%, 8 to 10% gains. You're looking at dividend investors, if you go back to the 80s and even before that, it's 10 to 15% depending upon what you're investing in. The last 2 years, it's the Magnificent Seven. That's all you see, Magnificent Seven. I could be driving down the highway and I see a billboard that says something about got milk, and I somehow think NVIDIA. Like that's not, it doesn't behave the way I would expect in a normal market. So we are not in a normal market, and that shows up every time you look at the trailing PE of a market, you look at the earnings per share, you look at like NVIDIA at one point was trading 89 times earnings. Like that's crazy high valuation. Right now I think it's at like 40 something. So their earnings are starting to catch up, which is great. But overall, most of the market gains are in the Mag 7 stocks.
Yeah, 80% of the market could drop tomorrow and the 7 stocks could go up, even everything out, and you wouldn't even see that drop.
And that's what's crazy to me to behold, is because companies that aren't producing the products that people have to have. Now, yeah, you do need video cards and things for your computers, but we're talking like we bought 3M stock. They make adhesives and roofing materials, like a lot of different products, Fastenal, the Dow Industrial. Like whenever the economy crashes, you're looking at that to perform badly. Now it has been for the past year. But the market gains overall for the past 5-6 years. Now, I granted 2020 was a very odd blip in the market. They've just been, none of it makes sense. Like none of it is actually behaving the way it has, going all the way back to the 1800s. We believe for 2025 that that will eventually right the ship, just like the Roaring Kitty, GameStop. Eventually the fundamentals start to come into play, and they do matter. So what we did this month is a little bit different. We decided this month to, well, it's a lot different for me.
It is a lot different.
So this month we decided to do 2 things. The first thing we did is we did another CD, kind of a bond type of investment. And we did $2,000 into that. Now that's paying about a 4.3%, so about 4.25.
Yeah.
And then we also decided to buy, if you watched our live stream, we covered that stock, General Dynamics. And we bought a lesser amount of General Dynamics.
$1,000.
Just in case we are wrong about the position or the trajectory of the market itself. Always try to hedge my bets that way just in case, and we did no different in Dividend Dudes as well. So with that said, why would we buy General Dynamics when they pay a 2% dividend and the Treasury is giving us 4.25?
4.31.
Yeah, something like that. So, well, it's diversification.
Right.
You don't.
It's hedging your bets.
If we are wrong, and let's say the market skyrockets when we're talking January, Trump is going to be the president at the end of this month. So if he gets elected and the market just goes up 50%, well, that Treasury doesn't look so good. You know, the bond or the CDs, those look pretty bad. I lost 40% potential gains. So that's why you do that. It's hedging your bets, I guess, if you will. And we're just trying to make sure that we are good stewards of that. If you've got a financial advisor, check with them on how they would have you do that for your portfolio.
Exactly. And if it goes down, then we're looking pretty good because now we have a better return.
Yep.
Also, keep in mind that the Treasury bond does mature in April.
Yes.
So then if it does go down, we could use that and get into the market again with something that is beat up and is deep value stock.
The fat pitch.
The fat pitch.
So we're thinking this spring we're going to have a better indication of where the market's actually going. Housing market's a big part of that. Construction permits and starts are a big part of that. What the Fed's doing, whether or not they actually raise rates again, or if they continue with their nothing or lowering the rates.
I still say they're going to lower at least a quarter this year. We'll
see. That's why we did a 3-month on the bond and 3-month on the CD, just to make sure that, you know, it's a short-term yield. Plus, I mean, if I go out a year, if we went out a whole year on that, we're getting like another 0.1%. There's no reason to go longer than that.
Right.
So what we ended up doing was trying to hedge our bets against that. We're predicting the spring we're going to know a little bit more about the market. And if you look at our portfolio overall, you'll notice that we've got 2 CDs in there, 1 CD and 1 bond. And the total yield for those 2, or the total amount for those 2, is about 6.5% of our portfolio. So if we were going to weight things with each other on a kind of an equal basis, we're looking at maybe 1 more month of being able to do this before we have to position ourselves in other companies. And I'm pretty sure it's going to be Intel.
And we'll have a lot of cash to do it in.
We will have a lot of cash to do it in.
Comparatively.
So we'll see. And again, if you've got companies that you would like us to look at for month 35, that'll be February, we'd be happy to take a look at them for the portfolio to see if we could add something new to the positions that we have, or just continue to grow with what we've already got in income. We're hoping to get the income above $200 a month before the spring hits, and we're pretty close. Right now we're at about $186.
So if you've been following along with the home game and you are enjoying what we're talking about here, go ahead and subscribe, like, do all those things. Catch out our live stream every Monday at noon Eastern Standard Time and ask us questions then. You have our undivided attention.
You can troll Brian, because I'm never wrong.
Go ahead and troll.
Troll away. What did we just do? Why did we tell people that? Why did we say that? Anyways.
Appreciate you guys sticking with us all this time. For 6,500 of you guys, thank you very much.
Yes.
Hopefully we could get that to 10,000 in a couple months here.
Yep. Thank you for watching. Stay tuned for the next stocks. And again, happy investing.
Peace. Oh.
Hoagies and grinders, maybe beans, meatloaf sandwich, sloppy joe.
Go back. What kind of beans?
Hoagies and grinders, maybe beans.
Navy beans.
You said I thought it was maybe beans.
Maybe beans? No.
It's not navy. Really?
Navy beans.
I've been hearing this song the whole. What are navy beans?
Meatloaf, that's the type of bean. Meatloaf sandwich.
Sloppy Joe.
Sloppy Joe.
It does make more sense.
Sloppy Joe.
Are we gonna get this started?
Yeah, it's recording.
Oh,
The whole thing
awesome.
about maybe beans.
I thought it was maybe. I really did.